Good morning, everyone. I hope you're all safe and well. I have the great pleasure of welcoming you all to Turnkey's second virtual risk management conference. I find it quite hard to believe it was actually June last year where we launched our first virtual event, which was our attempt to replace those in-person conferences that all of a sudden were no longer taking place. As fellow risk professionals, we appreciate that you need this content to learn from your peers, help better understand industry trends, and also gain some insight as to what might be coming around the corner. So you're more equipped then to introduce effective risk management initiatives within your own organisations. We certainly weren't envisaging being in the same position almost a year later on. So this second virtual risk management conference is again our humble attempt to help fill some of that content gap for you all. And we hope that you'll gain some real value from it. However, quick introduction. My name is Mark Jackson. I'm the Practice Director for Integrated Risk Management at Turnkey UK, meaning that I'm responsible for the service offerings and solutions we provide to our clients within this service line. I've been involved in the area of security, risk and controls for almost 20 years now, and my experience ranges across the design and implementation of security solutions and internal control frameworks to satisfy both internal and external regulatory requirements, as well as advising clients on their GRC technology solutions in pursuit of a truly integrated approach to risk management. So that's a little bit about me, and I'm really excited to introduce today's schedule for you, as I'm positive that there'll be topics and challenges that resonate with the majority of our audience, along with some useful takeaways as well. During this keynote session, I'll start by giving you a quick tour of the conference agenda for the day. There's some great speaker sessions for you to look forward to, and set aside some time in your calendars if you haven't already done so. As a reminder, by virtue of being in this session right now, then you've already registered and signed up to the conference as a whole, and that provides you with access to all of the sessions taking place. So there's no need to register for each session individually, so you can just turn up, sit back and soak up the content. As well as an introduction to the day's forthcoming activities, as the main part of this session, I'm also providing you with an update on a very topical subject right now in the UK, but which will also be very relevant to our friends and colleagues on the wider continent as well, which is the fully expected introduction of a new regulation focusing on internal controls over financial reporting. It's been coined as UK or EU SOX, which for any of you that have experienced Sarbanes-Oxley compliance at some point during your careers, I'm sure that that term conjures up many emotions, and not all of them particularly positive, I'm sure. Anyway, we'll get to discussing how we can try and change this perception a little bit later on and make it not so much of a daunting prospect. More importantly, how we can draw upon experience from the past to inform and enable a more sustainable way forward, including why it's a very good idea to start preparing for this new regulation now, and what suggested steps you can take to begin that preparation. So looking at today's agenda, we've got a variety of topics around the risk and compliance theme, involving a number of subject matter experts from both Turnkey, as well as those within our risk partner ecosystem. In addition, we're also delighted to welcome today a few of our valued clients who have kindly offered to talk about some risk-related challenges that they've encountered, and how they've been able to meet them with some interesting and innovative solutions. As mentioned, I'll be kicking off with an update on UK and EU SOX, and this session is pitched not only at those of you who already have a good grasp on what this is and have a clear understanding of what that might mean for your internal controls and compliance management processes, but also for those of you who are only just beginning to look at it, perhaps as you started to see articles or commentary popping up on LinkedIn, Twitter, other social media sources or websites, and you simply like to learn a little bit more about it and understand what all the fuss is about. So this session will therefore help bring you all up to speed in terms of the what and the why before we discuss the how. For the remainder of the day, we've got a number of guest speakers who are experts in the field of risk management, who I know will provide some really great insights for you all to take on board. The first of our guest speakers is Patrick Müller from Siemens, who will be accompanied by Andreas Nissen from our German team, both of whom, during our next session, which starts at 10, will explain how Siemens is using SAP's business integrity screening solution to reduce workload for manual control execution, but at the same time also managing to increase their control precision. At 11 o'clock, Gabriel Fiata from SAP, alongside Simon Persson, our operations director in the UK, will explore how SAP's cybersecurity risk reporting and enterprise threat detection solutions can help you take an integrated approach to risk management. We'll then take a brief interlude for lunch, but kicking us off for the first of our 4 afternoon sessions will be another client story. In this slot at 1 p.m, Riku Kari from UPM, accompanied by Petri Velnius, one of our directors based in Germany, will recount how UPM accelerated and improved their processes with business partner screening and what their roadmap towards counterparty risk management looks like. This will then be followed at 2 p.m. by our partners and friends at ServiceNow, Emlyn King and Alex Hollis, explaining how ServiceNow RM can operate alongside SAP to strengthen your risk and compliance posture whilst continuing to leverage your existing investment. And they'll be joined also by our resident ServiceNow architects and competency lead, Phil Green. The following session at 3 p.m. will take a slightly different format and will be delivered as a panel discussion between each of the practice directors from Turnkey. We'll be discussing what the key interrelationships are between risk, cybersecurity and identity access management. So hopefully it will raise some interesting points for consideration. Lastly, we'll be closing on a similar theme to my opening session by focusing on the subject of UK and EU SOX. And this time our Managing Director, Richard Hunt, will be talking to Grant Small from Legion Star, our friends on the other side of the pond, and also one of their clients, I believe, to reflect on some important lessons that should be learned from US SOX compliance programs as organizations begin preparations for the introduction of potentially something similar, which will wash up on our own shores in the very near future. So as you can see, we've got a very full day, which I'm sure will be jam-packed with interesting and useful insights, as well as providing you with some very practical takeaways and how you begin to make a positive change within your own organizations. In terms of the format, all of the sessions are approximately 45 minutes in duration, about sort of between 30 and 40 minutes for the delivery of the content, and the remaining 5 to 10 minutes or 15 minutes sometimes reserved for Q&A. So we want these sessions to be as interactive as possible. So seize this opportunity to ask as many questions as you like and benefit from the collective experience and knowledge of our guest speakers today. You can submit questions in the Q&A section within the stage chat window in the Hopin platform itself. And also, just for your reminder, each of the sessions will be recorded and they will be made available for you to consume at a later date. So let us start by understanding why. So why do we now find ourselves in a situation where we're staring at the almost inevitable introduction of a new regulation? A regulation which will place significant scrutiny on a company's internal controls over financial reporting. Well, to do so, we only need to look back at some of the financial scandals, auditing failures and cases of fraudulent accounting that have taken place in the UK across the last 6 or 7 years. There have been some really high-profile failures, including some really big names, and ultimately it has been recognised that something is fundamentally wrong, and these events can't continue to go on repeating themselves if anyone's to have any degree of confidence in these organisations going forward. So in September 2004, as an example, Tesco announced that issues uncovered in its UK food business meant it was likely to have overstated profits by 250 million. News which wiped 2 billion off the supermarket's share price in one day. And the overstatement was later revised up to 326 million. The cafe company also, Patisserie Valerie, collapsed in early 2019 following the discovery of a 40 million accounting fraud involving false invoices. And these are just a couple of examples. Unfortunately, there are many, many more. These incidents come from a mixture of, I guess, reckless individuals taking advantage of opportunities that present themselves, black holes existing in accounts, whether they be deliberate or due to human error, or maybe a case of both, that have then failed to be uncovered. As these scandals have then progressed, more attention has been placed on the accountancy industry as a whole, not just the Big Four, but they have obviously come under the microscope the most due to their domination of the audit market. In addition, focus has also landed on how organisations can restrict the opportunities available to conduct such unlawful activities, with increased accountability being a major discussion point. So let's take a look at what's happened over the past 2 to 3 years in order to address this situation. So it started in late 2018 with the Kingman report, which was published on reforming the auditing industry. This independent review was launched by the Department for Business, Energy and Industrial Strategy and was led by Sir John Kingman, the focus of which was an evaluation of the Financial Reporting Council, the FRC, who are the current body that regulates auditors, accountants and actuaries within the UK. And they also set the UK's corporate governance code, which really is the only substantial thing we've got right now that requires some degree of focus and evaluation regarding the internal controls and risk management systems and processes that companies in the UK have to have in place. The review additionally looked into both auditor procurement and remuneration for auditors. And all of this really was triggered off the back of a BEIS Select Committee inquiry after the collapse of Carillion, another one of those examples I showed you previously, which is the construction and facilities management services company, which began liquidation back in January 2018, and they held a significant number of government contracts. Towards the end of 2018, then the Competition and Markets Authority, the CMA, also announced a formal market study into the statutory audit sector, a sector which is dominated by very few audit firms. And so the effects and impacts of that were to be evaluated. On top of this, the Bryden report was published then in late 2019, which focused on the quality of audits, understanding the failures being repeatedly observed and proposing the required measures that to then help improve the quality of audits in the future, which help underpin confidence in our financial markets. Taking recommendations and proposals from each of these three sources, so Kingman, CMA and Bryden, the BEIS then published their white paper, Restoring Trust in Audit and Corporate Governance, and that was published in March this year, and began a consultation period inviting the industry to then feedback their comments on those proposals. This consultation period is going to end on the 8th of July, after which they will ultimately work on what this new UK internal control regulation will actually look like. No one knows exactly when this regulation will become law, but with the time it takes to sort of pass such legislation, then sometime from 2023 onwards is being anticipated from a timeline perspective. Let's dive a little bit into what the proposed reforms include as outlined in the white paper. Based on output from both the CMA's review and the Kingman report, it was clear that the audit market needs to be improved within the UK. Some key proposals in this area include a term called operational separation, which is focused on breaking up the big four firms so that they no longer have both audit and consulting practices under the same organisational structure in order to avoid any conflicts of interest. Another significant proposal is the use of managed shared audits between so-called challenger firms and the big four. So in practice, this means that although a big four firm may lead and retain ultimate control of an audit engagement, a reasonable proportion of it, i.e. perhaps say around a third, of the audit work would need to be undertaken by the smaller firm. Now, the white paper didn't go as far as suggesting joint audits, which I know disappointed many, which would involve two or more auditors taking joint ownership and responsibility for both audit planning and conducting the audit field work, as well as writing the audit report itself. This is an approach, actually, this latter approach is one that's already adopted in Belgium and France, which is mandated for financial services companies. It's also mandated for larger listed companies in France, although it doesn't have to include challenger firms. It's also been confirmed that the FRC, so the audit regulator, will be replaced by a new audit regulator, something requested in the Kingman report, which will be then called ARGA, so Audit Reporting and Governance Authority, which with aims of making this regulatory role more effective and extending their powers. The BIS also want to restore confidence in audits, and certain measures reflected this, including a greater focus on fraud. I mean, there's already a focus on fraud in audits, but it is believed that there's currently what they're referring to as an expectation gap between the extent of what external audit are required to do, as outlined in the audits, and what it can do. In addition, the audits shouldn't just focus on financial results, although that's obviously the most critical area, but also extend to things like environmental, social and governance targets, or ESG targets, to make companies more socially conscious, as well as investors who can then screen potential investments based on this type of information. Now, a big step forward involves the accountability proposals, which will hold company directors to account and inflict large fines or suspensions if they aren't doing what they should be around their corporate governance responsibilities. This has led to the suggestion of an annual attestation of internal controls over financial reporting. And this is where the UK SOX tagline comes from, as that was introduced as part of Section 404 of the US SOX regulation back in the early 2000s. The CEO and CFO, as part of this attestation, would need to attest to the operating effectiveness of their internal controls. And obviously, they can only do that if they have both transparency and confidence in the status of their controls. Further clarity on this requirement is still needed, obviously, to understand how similar this will be to Section 404. But related to internal controls, there's also a mention of material control failures and the need to disclose them. And if there are any disclosed, then this could open up the audit scope or the external audit scope here, to the CEO and the CFO attestation process, as well as having to audit the financial statements. So as well as the shake-up of the audit industry itself and approach to audits, internal controls as you can hear, have featured very heavily in these recommendations, which means companies will need to make their internal controls much more formal than they may currently be. The focus of this proposed internal controls attestation is around financial reporting controls, but what are they exactly? So I realise the term conjures up thoughts of financial reconciliations and other control measures which involve some form of number crunching, but they don't have to be like that in order to be considered as being important for financial reporting. It certainly includes them, but not to the exclusion of all other types of controls. Ultimately, any control that helps to ensure a company's financial statements are a true and fair reflection of their financial health, i.e. it matches reality, would be deemed in scope. So importantly, this means that IT controls which protect the completeness, accuracy and validity of data which flows through a company's accounts and influences the financial statements, as well as restricting access to this data accordingly through your IT systems, will be an important foundation to controls which focus on the treatment of that data from a business process and financial accounting perspective. Now, although we already have some standards enforcing internal controls over financial reporting, as I mentioned, the UK governance code earlier, this new regulation is very likely to take things to a whole new level. If US SOX is the only comparison we've got to go on at the moment, even though UK SOX may be a slightly less lighter version of it, we have to reflect on the demands of such a financial reporting regulation to try and anticipate and also get a head start on what might be required. As part of the annual assessment cycle, there are some core must-haves or must-dos, and the first and most obvious requirement is to have clear transparency over your internal controls environment and what are deemed key to your financial reporting. This means formal documentation of your control framework driven by the business risks, mapping those controls against those entities which operate them, or at least rely upon them, even if they are being operated out of a shared service center or other central function. So being able to reflect that relationship between controls, entities, and who's operating them and who's relying on the operation of those controls. This documentation needs to go down into the detail of each individual control activity itself, including control description, control objectives that it's helping to meet, the risks that it's helping to mitigate, details of control operators and owners, so that kind of governance model around it, the frequency that they're performed, their nature, so things like whether they're preventative, detective, or they're manual or automated, and also the related financial statement assertions, among other information associated with controls. This might sound like a sort of simple exercise, but it can be very challenging depending upon what your starting point is. In terms of determining which controls are in scope for the attestation, then some form of scoping exercise will need to be operated each year based on a financial materiality analysis to determine those which protect the most financially significant entities. As mentioned earlier, this won't just involve finance controls, but also IT controls related to those supporting IT systems. So identifying those IT systems under review will also be part of this scoping phase. Now, a significant part of US SOX is the level of control evaluation performed by management at different points across the year in order to ensure that the controls are operating as expected. And if they're not, flag that as soon as possible so they can be remediated. Now, this could be based on manual sample-based testing, more light touch self-assessments, or even the deployment of continuous monitoring. The level of testing required will be informed by your scoping exercise and the required testing strategy off the back of that. However, as the majority of any controls testing in the UK is usually left to internal audit to perform, The need for the first two lines to do this, which make up the management layer as per the Institute of Internal Auditors 3 lines model, then that will be quite a step change for many. It will also require time and effort and some relatively specific skills to go with it. So all of this then needs to be reported at the right levels across the organization, so there's complete visibility and transparency of control design and operating effectiveness, as well as any deficiencies and associated remediation activities. As I mentioned earlier, it's like that the organizations are going to have to report on material weaknesses in controls as well. Without this information, an attestation at board level just won't be possible, and this sign-off will roll up the chain, as so the layer below continually provides confidence to the layer above until it reaches the executive level for overall sign-off. So there's no doubt that the audit profession wants to change and wants to change for the good. It recognises that in order to achieve that objective, it needs to be more accountable and improve the quality of the audits. This is a desire not just in the UK, but also across the continent. Accountancy Europe, who represent 1 million qualified accountants, auditors and advisors across 35 countries, have recommended to reinforce the financial reporting ecosystem throughout Europe with respect to fraud and going concern, which they see as 2 key areas to restoring public trust. Now, fraud and going concern issues are often correlated. So if you think about it, fraud can threaten a company's ability to continue as a going concern because it deteriorates investors' trust in the company and can lead to its failure. Conversely, fraudulent behavior may aim to hide a company's going concern issues, i.e. make a company look healthier than it is. When a company collapses, all stakeholders are affected, from employees down to investors, and it eventually erodes the public's trust in these financial markets. And the COVID-19 crisis has further increased the pressure and made companies more vulnerable to fraud and corporate failures. So it's more important than ever to improve an organization's resilience. Auditors and all other stakeholders in the financial reporting ecosystem, so company boards and management, regulators, public oversight authorities, and others, are crucial in doing that. It's widely believed that we'll see both the UK and EU equivalent of the US SOX regulation introduced. It's just a matter of when. Some consistency is also deemed to be required over non-financial reporting. Otherwise, it becomes quite difficult for multinational companies to manage differing standards based on the different locations in which they operate. I guess the answer to this next question depends very much on the plans that you may already have in place, or whether you intend to start addressing this area or not in the very near future. There's no doubt there's a lot to do if what materializes is anything close to US SOX. Based on my own experience and exposure to the internal control frameworks and associated processes, governance processes that companies operate that don't have to comply with US SOX, then yeah, they're probably by no means ready for such a formal, prescriptive and detailed regulation right now. But on the other hand, you wouldn't expect them to be that to be the case, because it's not required at the moment. The key is in recognizing this and doing the right things now to give yourselves a fighting chance. And part of that will obviously be wanting to wait a bit to get more clarity from government to prevent over-investing in such activities. Now, let's be clear, nothing you do to improve your internal control environment will be detrimental to your organization, but there is a balance that needs to be struck when you have limited resources and budget to put towards this. As well as the significant planning involved, there will be new ways of working. So with documentation and evidence is going to be key. As I showed in a previous slide, a well-known motto from US SOX is if you can't prove it, it didn't happen. So that needs to be on the forefront of everyone's minds. This can be instilled with a strong risk and controls culture, which you may already have in place to a certain degree, but it does need to be enforced with a degree of formality to stand up to the rigor of a SOX environment. So it needs to really come from the top with some strong messages. The other challenge will inevitably be around resourcing and having the right level of expertise internally when it comes to risks and controls. You'll certainly have some of this expertise in-house though, that's for sure. That might come as some surprise to some of you, but you'll definitely have the required expertise in-house. It's just how available these individuals can be to support a significant controls improvement program in order to bring it up to the standards required, as well as being able to maintain it going forward. So do you need to supplement those skills in certain areas, particularly in more specialist areas around IT controls, design, implementation and testing, for example? So these are all just things that need to be considered sooner rather than later. So with all these things to consider, I understand that costs and benefits is something that will obviously be of real interest to all of you. So how much is this likely to cost me, and what are the benefits I'm likely to see? It's very difficult to predict this until we know exactly what this regulation entails. So all we can do for comparison purposes at the moment is look at US SOX for some indications at least. When researching this, I came across an interesting study by Protivity, who conducted a SOX compliance survey back in 2018, and they did some comparisons based on similar surveys the previous year. In terms of SOX compliance costs, then many organizations had seen them continue to increase. However, it was possible that at least some of this was attributed to a new revenue recognition accounting standard, which was effective from 2018. Otherwise, it seems that costs appear to be hinging off an organization's unique circumstances and structure. So there's no specific rule which would determine how much it's going to cost you for this type of compliance effort. And these factors include, but are not limited to, the number of controls and locations that a company has, as well as the number of regions in which they operate. It's clear, though, that executives and compliance leaders need to seek ways in which they might reduce their expenditures for this type of compliance activities, while increasing the value that the organization derives from these activities. Despite these continued challenges around cost, nearly 90% of companies believe that their internal control over financial reporting has improved, with 60% seeing significant or moderate improvements. It was also interesting to see that almost 60% have seen an enhanced understanding of control design and control operating effectiveness as a primary benefit. So it's helped to instill a controls mindset and skills also within the organization, which probably weren't there before. Similarly, the continued improvement of business processes as the highest scoring benefit clearly shows that internal controls don't have to be a hindrance to your operations. It can actually help provide clarity and gain efficiencies, as long as they're designed and operated in the right way, of course. We talked about resourcing challenges earlier, and aside from the role of internal audit, the survey showed that there is a strong reliance on third parties to support testing efforts and provide that scale that might be required. But there's still the strong use of management for this purpose as well. So there are things you can definitely do in-house. So think about adopting a flexible resourcing model to suit your needs and manage the associated costs. So what should you be doing now? Well, it can never do you any harm to start seeking advice and guidance. And there's a variety of sources which you can use to do so. And you'll likely need help across a variety of different topics. In particular, once the white paper consultation period is finished, and this is converted into something more specific, then a touch point with your go-to advisors, whether they be internal or external, is a good idea. It's also worth starting to think about the different groups that make up the 3 lines model, what their role is likely to be in a SOX-styled internal controls regulation. You can then begin to define some roles and responsibilities based on that structure, including the collaboration between the 3 lines, senior management sitting above, and an external audit to the side. If you're concerned about your current internal controls being fit for purpose, whether that be from a completeness perspective or a concern that it's overly manual in nature, or you're pretty much starting from scratch, then it's a good idea to set up a project or program dedicated to controls improvement. Your controls framework will be your foundation, so it's important that you're building on a solid one. And that includes reviewing your supporting technology and what you need to make controls, operation testing, management and reporting as effective and efficient as possible. It's also helpful to reach out to your peers. In fact, I hosted a roundtable on this very topic last week, and the attendees found it really useful to know where they are compared to others, get ideas from each other about their slightly different approaches that they're taking, as well as share their own challenges and fears, making them realize that they're not alone in this process. We've heard from the anticipated requirements, as well as the costs experienced up to now by those complying with the US SOX. This is going to be a marathon rather than a sprint. As a result, you need to pace yourself and settle into a rhythm that is sustainable over time. So this means you need to be smart about what you're doing and the way you're doing it, so that you're always getting the biggest bang for your buck in everything that you do. Can you get clear oversight of your internal controls with up-to-date status reports that are real-time in nature? Or do you need to get information from several different spreadsheets or systems in order to get this picture By the time you've put it together, it's now out of date. Are you able to sit back and react to control alerts through indicators across your in-scope IT systems, which will automatically detect when there's a potential problem with one of your key controls? Or do you have to spend time logging into each of your IT systems to check settings, taking screenshots and recording them in a document, which you then need to store on a SharePoint site for your records? These are sorts of questions you should be asking yourself. Don't underestimate the important role that technology will play in helping you achieve sustainable compliance. It can also help you turn sluggish manual controls into lean muscular ones, all being led by a risk-based approach, with the ability to drive continuous improvement over time by defining some useful compliance metrics. However, you don't think you need to do all of this at once. There's certainly some things you should be aiming to have in place for day one compliance, such as an IRM solution upon which you can manage your related risks and controls, including reporting and all of the required compliance activities around documentation, scoping, and mapping to entities. You should also be aiming for a minimum level of automation from day one, as there's some low-hanging fruit which your IRM solution should be able to support you in achieving when it comes to continuous controls monitoring. The automation also comes from workflow-driven communication between key stakeholders, particularly when planning and conducting controls testing, dealing with control deficiencies and the required remediation activities to turn them back to green. Resourcing is something we also touched on earlier, but be realistic about what you can achieve yourself and where you may need some support, even investing in the enablement of your own teams. This doesn't need to be an all or nothing approach either. A flexible approach driven largely internally, but with the relevant support and guidance where required, can be just as effective and still help to meet your compliance needs. So we come to the end of my formal presentation content. This is where you have the opportunity to ask any questions you may have on what you've just heard or about the topic in general. I'm going to take a quick look at the Q&A to see if any questions have dropped in during the last sort of half hour or so, and I'll do my best to answer them. So please bear with me just for a few seconds while I just check that. Okay, so if I read a couple of the questions here. So can we learn the lessons from the US SOX experiences and be more ambitious with the delivery of control transformations, perhaps moving away from the traditional but ponderous Big Four style approach? Certainly, I think I touched upon a couple of these points during the session itself. We certainly need to learn lessons from US SOX. So, you know, I was involved in when I was working at PwC many years ago, but I got involved in SOX engagements for some foreign private issuers, having to support them in some of their SOX testing and management of their controls. And it's a huge slog. And, you know, think back to the time, there wasn't some of the technology available at that point in time. So lots of things were being done in a very manual nature, lots of spreadsheets, lots of emails, approvals and things like that. The sorts of things that you just don't need to have in place at the moment. And also the other thing to recognize is the fact that it was a case of throw as many controls at risk as you can and hope that something sticks in order to be compliant. You know, there's that fear of compliance as well, of not being compliant. So as a result, a lot of organizations at the start of the US Sarbanes-Oxley regulation tended to go overboard because, you know, they'd rather do too much than too little. But there's definitely a balance that can be struck here, and this is one of the important lessons that needs to be learned. You can still have you can still be compliant and meet the requirements and mitigate all your relevant risks, but still have a kind of a lean, muscular internal control framework, which doesn't have excessive weight, which is just, you know, which is redundant really, and costing you a lot of time and effort, which is wasted. So there's a bit about control design, as well as having the technology in place to support you. And as I mentioned, you know, you don't have to bring Big Four in place to completely run a program from start to finish. Yeah, certainly that can support it. They could be from a QA role, for example, but there's other ways. You know, recognize the fact that you've got some of this internal expertise in-house yourself, and try and make use of that wherever possible, and then use external support, whether it be Big Four or others, to come in and supplement what you've already got, and it will help make it a lot more manageable. certainly from a budgeting perspective as well, but still enable you to come out with the right endpoint and the right results. So if a company is dual listed, US, UK stock, will we have to do anything for UK SOX? It's a good question. So my understanding of that is that if it's already US listed, then that likely will cover at least the requirements from a UK SOX perspective, but potentially more if UK is more of a light version of it. So my expectation is that if you're dual listed and then therefore you're already having to comply with US SOX, then that might be something that is you just use the results of that for purposes of UK SOX as well. Those sorts of specific minutiae are still to be clarified once we know a bit more after the consultation period is done. But it's a good question, and certainly I think it's something that these companies that are already geared up for US SOX are already got a lot of these things in place, which we've been talking about, and these strategies, and maybe there's a bit more they can do around making it sustainable, more sustainable going forward. As we saw with the productivity survey, there's still a lot of costs associated with SOX compliance, and probably more things can be done to achieve it a more sustainable way forward. But yeah, I wouldn't expect them to have to do double what they're doing at the moment. That should be sufficient to comply with UK SOX as well. But we'll need to find out more. What technology solutions are we? Sorry, it's just moving as more questions are coming in. So, what technology solutions are we likely to need to achieve and maintain compliance with whatever UK SOX looks like? So, I think there's a couple of things here. There's obviously going to be as a foundational solution, what you might call an IRM solution or a GRC solution, something in which you can manage your compliance activities. So it could be a central store for your internal control framework or your risks, mapping of those controls to regulations, conducting and planning and recording and even performing testing and control evaluations. It also enables you to do some of these things we talked about around automation, which is continuous controls monitoring. These sorts of platforms allow you to do all of the associated activities. If we think back to that slide that I showed earlier about this, the annual assessment cycle, all of those points, any kind of GR system that's worth its salt will cover all of those requirements from that annual assessment cycle, including a facility to be able to perform a sign off at the end of a year if sign off is required for a particular regulation, which it sounds like it's going to be for UK SOX because of the attestation that's been mentioned. So I think that will be a very good foundational solution if organizations haven't already got something in place like that. There's obviously, as well as the sort of traditional controls, it's also been mentioned about cybersecurity as well. So, having relevant cybersecurity solutions in place, which will address some of the controls in that area, is also something to look at. And people are ramping up on this side anyway because of the obvious increased threats that we're getting in that space. But things around sort of SIEM solutions and stuff like that is things that you need to be considered. And they act as sort of the control execution bit. They're at the sharp end of the controls, whereas still though you can still manage the status of those controls, the recording of those controls in your GRC system as well. So that GRC system should be something that's integrated and can connect and reach out to all of these other supporting systems that you have in place. The other thing to mention on the technology side is, obviously we do a lot with SAP customers, so there's a lot of automation that you can achieve from a control perspective within your enterprise finance systems as well, that people may not be taking advantage of right now. They might be doing controls in a much more manual way, but there's configuration controls out there or master data controls that they're just not aware of, they're just not taking advantage of. So it's worth, as part of that control transformation program we talked about and looking for a lean approach, then it's worth looking at your own central sort of finance systems and making sure you're getting the most out of that from a technology perspective as well. Any tips for getting the business to own their risks and controls, do you see UK SOX as a mechanism to help drive this ownership? Yeah, I think certainly. When there's the onus on attestation and this accountability, that's this formal accountability that's suddenly going to be put on directors, those at the top of the company, then there's going to be ownership is going to be enforced from the top anyway. If they need to sign off and be personally accountable, then you're going to be sure that they're going to make other people below them accountable for giving them that confidence and that visibility of their internal control framework, so they're comfortable when they sign off on it at the end of the year, and they're aware if there's any control deficiencies that they need to record as well. So by virtue of that, that's going to flow all the way down the chain and ensure that people have got responsibilities and accountabilities throughout the organization when it comes to risk controls, and risk ownership and control ownership is certainly going to be a big part of that, as well as who's actually operating those controls as well. All this stuff will need to be recorded, so that if there are any problems with controls, or just part of your testing, that people know who to speak to, where to go to get further information. So certainly I think UK SOX will be a mechanism to help drive this ownership. Just looking down the list here. What would you say is the bigger challenge, the definition of controls to meet standards or the evidential requirements? How can we ease the burden? So I think the definition, well, they're both obviously challenging things, but I think the definition of the controls is probably, I would suggest, is probably the easier of the two. You'll have within your organization business process experts. They know the process that your companies are operated end to end, like the back of their hand, and as part of that, they would, or they should, understand the risks associated with it. They may need a bit of help. It sounds sometimes simple about implementing controls, but actually understanding what the nuts and bolts of a good control is sometimes not necessary. It's not necessarily known by everyone. So they may need a bit of support on understanding what fundamentally makes a good control, so they can then look at their risks that they need to mitigate and turn those into some effective controls. And I don't mean, again, lots of manual controls where it requires lots of reconciliations or running through reports or things like that. Wherever possible, trying to make them efficient, which ultimately means trying to make them preventive, system-driven if at all possible, utilizing other technology to support in that as well, whether it be GRC technology or maybe even robotic process automation type stuff, which could also be used for testing as well. That's something to explore. But that's although there's some level of expertise required to support on the controls bit. You've definitely got the in-house expertise on the processes and understanding what the risks are and what needs to be met. In terms of the evidential requirements, I think that's definitely going to be a big step change for a lot of people, getting their heads around the fact that, well, I've done this control, so what's the problem? Well, you haven't recorded it, or not in a way that somebody can go back and determine that you've actually performed this control and you performed it as per the control description. So that, I think, is going to be quite a big mindset change for a lot of people. But again, there's ways in which you can try and achieve these things, which, because it sounds like that would be a huge manual burden, and there is effort associated with it. But again, there's smarter ways which you can look at this and try and think, how can I do this more efficiently? And if you sort of keep asking yourselves about those sorts of questions right at the start, it avoids you getting 2-3 years down the line, and then you've got a big problem around inefficiencies when it comes to control operation or control testing, evidence and controls, things like that, which becomes a lot more difficult to rectify that far down the line, and becomes probably more expensive because you're always having to redesign a lot of things. If you try and ask yourself those questions at the start, then it will make your life a lot easier. Again, you're not going to do everything from day one. It's achieving something that's realistic, achieving some form of automation, achieving some efficiencies and a lean control environment. But you're going to expect there's also going to be improvements to be added over years 2, 3, 4, etc. but you don't have to. It doesn't mean you have to suffer from day one. I think we've just come up to the 45 minute mark. So yeah, just in terms of just quickly before I depart, as mentioned previously, you can access all of the other sessions scheduled today as part of your registration. And any of your colleagues that might be interested can still register throughout the day. So please tell them to visit the forum website. As a reminder, our next session with Siemens is kicking off in a few minutes' time at 10 o'clock. And lastly, I'd just like to thank you all for listening. Please feel free to contact me if you want to discuss any of this topic any further, or if you'd like to find out more about Turnkey's IRM service offerings. I hope you all gain some value from the remaining sessions today. So thanks for attending.